This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Monday, June 29, 2026, and this is the New York session. Now, let's get into it. Solana is trading at $75.22, up 7.38%, while the Fear and Greed Index sits at a historic low of 14 out of 100. The market is rising while the crowd is terrified, creating a structural split where retail capital is ignoring institutional caution to chase high-beta utility tokens. Looking ahead, the market's attention is fixed on PayPay's search for a $1.10 billion Nasdaq IPO. This filing is the primary catalyst for the current Solana momentum. We also have the U.S. Senate housing bill, which includes a CBDC ban, creating regulatory uncertainty for government-backed digital assets. Apex, what does this bifurcation mean for the session?
It means liquidity is splitting. Institutional capital is likely rotating into tokenized real-world assets as TD Securities sees the NYSE tokenization as an institutional turning point, while retail flows are chasing the pay narrative in Solana. We are watching two distinct markets operate simultaneously.
Total crypto market cap is up 2.24% to $2.17 trillion, with 24-hour volume hitting $85.31 billion. Bitcoin is holding at $60,278, up 2.22%, but Bitcoin dominance is declining to 55.64%. The VIX is at 18.41, down 0.48, indicating moderate equity volatility, yet crypto sentiment is in extreme fear. Let's look at the headlines moving the needle. First, Cointelegraph reports, Iranian crypto outflows spike 700% after U.S.-Israeli airstrikes. This is a massive geopolitical shock to liquidity flows. SPECTER, you track the risk here.
It's a liquidity trap. A 700% spike in outflows suggests capital is fleeing jurisdictional risk, potentially flooding exchanges with sell-side pressure. This creates a fragile floor. If those outflows hit spot markets, the lack of institutional support makes a sharp correction likely.
Second, Cointelegraph reports, Bitcoin futures demand falls to 2024 lows. Are institutions exiting the market? This contradicts the spot price strength. CIPHER, explain the flow disconnect.
Institutions are de-risking. The drop in futures demand to 2024 lows confirms that leveraged long exposure is evaporating. The $85.31 billion in volume is not being driven by institutional hedging. It's being driven by spot and retail flows chasing narratives like the PayPay IPO. The floor is gone.
Third, CoinDesk reports, PayPay, 40% owner of Binance Japan, seeks up to $1.10 billion in Nasdaq IPO. This is the engine for the altcoin rally. Pulse, how is sentiment reacting? Retail is ignoring the 14 over 100 fear score. The PayPay news is overriding macro fear, driving a localized mania in Solana and payment rails. The community is decoupling from the geopolitical fear and focusing entirely on the IPO catalyst. Let's start with Solana. It's at $75.22, up 7.38%, leading the charge. Grid, is this a valid breakout or a trap?
Solana is trading at $75.22, a level that confirms a breakout from previous consolidation. The volume surge is disproportionate to Bitcoin's move, signaling a structural shift in liquidity. If it holds above $75.22, the technical structure is bullish for the altcoin sector.
But look at the source. This volume is linked to the PayPay IPO narrative, not organic network growth. The flow is speculative. When the IPO filing details drop, if there's no immediate Solana integration mentioned, that $85.31 billion in volume could vanish, leaving Solana exposed.
And remember, Bitcoin futures are at 2024 lows. There is no institutional hedge supporting Solana's rise. If the retail tide turns, Solana has nowhere to fall but down. It's a high beta play with no safety net.
So the technicals look strong, but the foundation is retail heavy. Apex, how do we read this bifurcation?
Grid sees the breakout, but CIPHER and SPECTER highlight the fragility. Solana is acting as a proxy for risk-on sentiment independent of Bitcoin. The market is pricing in a utility narrative over a store of value narrative. The risk is that, if Bitcoin fails to hold $60,278, Solana's correlation will snap back, dragging it down with it.
Moving to Bitcoin, it's at $60,278, up 2.22%. Grid, where is the support?
Bitcoin is holding steady at $60,278, with resistance near the 24-hour high of $60,644. The chart shows a slow grind, not a breakout. The declining dominance suggests capital is rotating out of Bitcoin, making it a passive anchor rather than a leader.
The on-chain data supports the rotation. Core Scientific's Q4 results disappointed, pressuring the mining sector. Miners are likely selling to cover costs, adding sell pressure. Meanwhile, the drop in futures demand means institutions are not adding leverage. The $60,278 level is being held by spot holders, not leveraged traders.
That's the danger. A spot-supported rally is fragile. If miners continue to sell and institutions exit futures, there's no buy-side depth to absorb a shock. The 700% Iranian outflows could trigger a cascade of stop losses below $60,000 if volume dries up.
So Bitcoin is holding, but the bid is thinning. Ethereum is at $1,611.03, up 3.68%. Pulse, is Ethereum following Solana's lead? Ethereum is lagging. The sentiment is shifting entirely towards Solana's payment rails due to the pay catalyst. Ethereum is still seen as a legacy layer, so retail sentiment is colder here. The fear index is 14/100, but that fear is concentrated on macro risks, not on Ethereum specifically. It's just being left behind. Avalanche is at $6.70, up 5.72%. Grid, what's the technical picture?
Avalanche is breaking out at $6.70, mirroring Solana's move. It's testing immediate resistance at the 24-hour high of $6.78. The pattern suggests a continuation of the altcoin rotation, but the volume needs to sustain above $6.70 to confirm it's not a dead cat bounce.
The flow is similar to Solana. It's part of the broader high beta utility rotation. Capital is moving away from Bitcoin's 55.64% dominance into these ecosystem tokens. But again, this is retail-driven. Without institutional futures support, these breakouts are susceptible to quick reversals.
I'd caution against chasing $6.70. The VIX is at 18.41, which is moderate, but crypto fear is extreme. When fear is this high, breakouts often fail. If the Iranian outflows escalate, Avalanche will likely see sharper sell-offs than Bitcoin because it lacks the liquidity buffer.
Cointelegraph reports, Bitfinex revives tokenized bonds targeting crypto-native yield seekers. CIPHER, what does this mean for flows?
This is the institutional counterflow. While retail chases Solana, institutions are exploring tokenized bonds for yield. This confirms the bifurcation. Institutional money is moving into RWA, real-world assets, like tokenized bonds, while retail is moving into alts. They are not interacting.
SPECTER, does this create a risk for the altcoin rally?
It creates a liquidity vacuum. If institutions are moving to tokenized bonds and exiting crypto futures, they are removing the smart money from the altcoin market. The rally is being sustained by retail alone, which is the most fragile foundation for a sustained move.
Apex, tie it together. Grid flagged Solana's breakout, CIPHER showed the retail-driven flow, and SPECTER warned of the institutional exit. What is the market telling us?
The market is telling us that the floor has moved. Grid $60,278 support for Bitcoin is being tested by a lack of futures demand. CIPHER data shows that $85.31 billion in volume is not supporting Bitcoin, but rather rotating into Solana and Avalanche. SPECTER risk is valid. Without institutional leverage, this rally is hollow. The synthesis is that we are in a retail-led recovery phase, which is high reward but high risk. The extreme fear of 14/100 is being ignored by price action, but the structural divergence between Bitcoin and alts is the key signal.
Key takeaways. Solana is leading the charge on retail momentum, but Bitcoin's declining dominance and falling futures demand signal institutional caution. The market is bifurcating, with capital splitting between high-beta altcoins and tokenized real-world assets. Tomorrow, watch the PayPay IPO filing details and Bitcoin's ability to hold $60,278 without rising volume. This has been ShadowQuant Crypto Edition. Stay analytical. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.